I'm just intrigued, given the lack of liabilities, given the customer base of SVB being so high quality, is this not actually an extremely strategic and good acquisition for a potential buyer like JPM or Goldman Sachs or anyone else?
So that's a judgment, right? I mean, I personally think it is. I think SVB is a very, very unusual, super high quality set of customers that many banks would want to have. They're making an economic choice about whether they could do it. There is a significant LTV to these customers. They also have to look at their own regulatory issues, and I'm sure many of them are negotiating with the FDIC over whether they can buy it. And so there's lots of dynamics around that cause someone to either pause or pursue it aggressively. But it's not like the situation we had in 2008 where you'd say there's a time bomb ticking on the client base. Or in this situation, it's a pretty healthy set of venture capital firms, the innovation economy across the United States that I think anyone would want to have if nothing else mattered. I don't think there's a bank that wouldn't want to have the clients of SVB at their fingertips.
I do want to ask it because I actually tweeted, like, JPM, if you want the love of an ecosystem forever, it's the best $6 billion you will ever spend.
But it's not $6 billion.
Or whatever the price could be. So, it's the best money you'll spend. But I got a load of responses that, yes, agreed, but regulation will prevent it because it exceeds the 10% deposit limit. Will regulation get in the way of an acquisition?
So I think all different banks have all different issues, and they're looking at financial metrics, their own challenges around how they deal with some of these, how they deal with their own balance sheet and what it looks like combined. But the regulators are highly incented to get a buyer for this business this weekend. And so going back to 2008 as the example, they will pull out all the stops in order to get it to the likely and best outcome possible for American insurers. When you walk into the FDIC's office in Washington, D.C., there's a gigantic gold circle that highlights the mission of the FDIC, which is, it's working on behalf of the American people to ensure the depositors and create stability in the financial system. They take that job really seriously. And so, you've often heard fintechs complain about regulation and the work they need to do on compliance, or you did many years ago. Now I think people have come to appreciate it. You got to take that seriously. And the regulators and the folks who work at the FDIC take their job pretty damn seriously. Many of them have worked there for 20, 30, 40 years. They understand how to deal with these. They've seen cycles. They go in there laser focused on how to analyze, take apart a balance sheet, focus on liquidity, and make sure they get to a good outcome with a buyer.